we were in negotiations.
Investing in real estate, they're winning, they're making money.
What's up, everyone? Welcome to the Real Estate Educators Podcast, where we provide the education you could build on. I am your host, Kevin Amolsch. This podcast is so much fun, and unlike many that I've seen, in that we help real estate investors and real estate educators. So if you're an investor or if you're providing content to investors, this is the podcast for you. With our good friend and co-host, Mr. Justin Cooper. What's up, Justin?
How are you?
I'm doing good, man. Why are you laughing at me?
I'm laughing with you, Kevin.
Yeah, thank you. And our very special guest and good friend and local, Denver expert, Mr. Joseph Massey. How's it going, man?
Nice to see you guys. Always appreciate you guys inviting me to join the podcast. As you guys know, I love talking about this stuff. I dream about like graphs and charts and mortgages. So I'm just always grateful when you guys bring me on here to talk about fun stuff like statistics. So thanks so much for having me, guys.
I think we should absolutely address the NAR settlement. For those who may or may not know, right, massive lawsuits and huge settlements coming out. NAR, the National Association of Realtors, was sued, basically saying there was price fixing and other things around real estate agent commissions. People didn't realize that real estate commissions are negotiable, that the seller does not have to pay for both the buyers and the seller's real estate agents. And so big lawsuits, billions of dollars in settlements. And so we're expecting, or the headlines are saying, that we should expect a huge shakeup in the real estate industry. And Kevin actually just put out a really well put together article on this. So I want Kevin to dive in a little bit more. But the headlines were saying, big shakeup coming. You don't have to pay for your buyer's agents. Sellers certainly don't. But the reality is probably going to be a little bit different. So Kevin, do you want to dive in and share a little bit of like some highlights from your article?
Yeah, I mean, I'm curious what Joe's thoughts are as well. But I guess there's not that much that changes, you all. Like Coop said, what's really changing is that you cannot advertise in the MLS a buyer's agent's commission. It doesn't say you can't advertise a commission that you're willing to pay it. It doesn't say you can't pay it. It just says you can't advertise it in the MLS. So that's the biggest shakeup. And the other one is buyer's agents need to negotiate that commission up front. And it has to be very defined. So either a flat amount or a way to calculate the amount of the commission has to be in writing, and that has to be in place before they even unlock one door. So those are the two big changes. But what's the impact to the market, Joe?
I personally think the impact to the market will be relatively small because the agents that I know, that I work with, that I do a lot of transactions with, they already do this. They already explained to their client, hey, we're going to work to negotiate in for the seller to pay my commission. If the seller is unable or unwilling to, I'm going to have to ask you guys to pay my commission. And agents I've worked with for decades have always explained it that way. I do think there's a certain subset of agents that say, hey, my services are free. You don't have to pay me. That was part of the lawsuit. That's not 100% accurate. I think those agents that have been using that script may have a more difficult time in the market. But I think by and large, 80+% of agents have already been doing it the right way. And the biggest change, like you said, is this commission paid by the seller cannot be advertised in the MLS. So I think real estate agents are going to have to reach out to the listing agent and say, over the phone, are you paying a commission on this? Or do we need to negotiate it into the contract? So the biggest thing it does is require a little bit more communication, not so much automated through the MLS, and changes the calculus of how you negotiate that, whether you're going to have to build it in or whether it's already built in. So it's just one additional variable. And I think the final thing is being able to have the buyer's agent convey that value to the buyer. And again, by and large percentage of the people that I work with already do that. So I don't think it's going to make a huge impact for the real estate community at large.
Let's play a game here. You guys up for a game?
Yes.
We're going to call it winners and losers. I would like to just throw out some group of people or something, and you guys tell me, are they winning or losing with this settlement?
All right.
All right. So home values, winning or losing?
No change.
Winning because it's going to continue at the pace it has been.
Cool. I agree with both of you. Listing agents.
No change.
Winning, same
Yeah.
thing, going to continue.
Okay. I think possibly losing, and here's why. They're not going to be able to get more than their 3.2% commission, but they're going to have to work harder because they're going to be opening up more doors. So gone are the days of just throwing the MLS and not working. You're going to actually have open houses. You're going to have to meet buyers that are finding you on Zillow, Redfin. So you're probably going to have to work a little bit harder. But as far as commission, no change.
Mhm.
Okay. Buyers agents.
Good
Tricky
buyers
one.
agents,
This is a
good
tricky one.
good buyers agents, winning. Um, Poor buyers agents, losing.
Yeah, I 100% agree with that. There, just like what you said, Kevin, about the listing agents, they're going to have to work harder. You're going to have to disclose more. You're going to have to negotiate more. I mean, maybe it's 3 extra pieces of paper that need to be signed and 2 extra phone calls, but that's more than what people have been doing. And I think the ones that have caused these lawsuits to come up were the ones who weren't even making a single phone call, right? And so for them, they're definitely going to be losing. It's going to get a lot more complicated for them. But the ones that Joe works with, the folks who are already winning as buyers agents, they're going to continue to win because they're
Gonna
already
keep
doing all
going.
these right things.
I 100% agree. My opinion, if you're a good buyer's agent, you're going to win because it's going to thin the herd a little bit. We are going to see buyer's agents leaving the business, right? So it's going to reduce competition and you're going to work a lot less because you're not going to be driving buyers around looking at properties. It really is going to be come to me to represent you. So you're more desk time, less field time, but I also believe it's less commission. We'll see how it shakes out, but I think you might see average commissions come down closer to the 1% range, but you'll be doing more transactions.
Yeah.
Okay, sellers.
Mm, I'm gonna go with could be winning if they choose not to pay a commission. However, could be losing if they choose not to pay a commission because they're going to save money by not paying it, but they're going to have fewer eyeballs on the property and they may get a lower price.
Good. Yep.
Yeah, I agree with that 100%.
I think buyers are the winner or sellers are the winners here because if buyers agents commissions, if what we said that values were going to stay the same, so Joe, Coop, and I all agree that it's not going to impact real estate values. If that's true and buyer's agent commission come down, where's the balance of that commission going to go? So I think
Seller.
the seller's gross price for the house will probably stay the same, but their net will go up a little bit because you're paying less in commissions. So I say sellers net positive in this. What about buyers?
Mm, Buyers may be net negative if they do have to pay out of their pocket sometimes, which some buyers may not be able to do that. And I think if you have poor representation, buyers may not have an agent that's able to negotiate for that commission to be paid. That's where it could be a problem if you have poor representation.
Yeah, I agree with that. But interesting, Joe, what are you hearing or seeing, and what's happening with um, if it can't come out of the sales price through the seller, could a buyer be able to get their commission financed in the loan?
If you're making a minimum down payment, no. So let's say you're doing FHA with 3.5% down. You have to invest that 3.5%. But let's say you're putting 10% down. Well, and you need to pay your buyer's agent 3%. Let's just make the math easy. You could choose to put 7% down, keep 3% of your own cash, and use that 3% to pay your buyer's agent. So it's in effect financing it in because you're taking out a 3% higher loan. And so now you're just paying that over the term of the loan. But if you're using any type of down payment assistance or you're making a minimum down payment, that option would not be available. Or you could finance it in the form of seller concessions by potentially raising the price by 3%, having the seller contribute 3% towards your closing costs. And if one of those closing cost items is the buyer's agent commission, that's how you could finance it in as well. So directly including it into the loan, no, but indirectly including it into the loan, yes.
Yeah, and I think that's why we think that nothing's really going to change here, or not a lot. I mean, something's changing. There's no question about that. But if you're going to increase the price to pay the commission, that's exactly what you're doing right now anyway. So
Yep.
it's the exact same. And FHA has announced that it's not going to count it as a concession towards the 6%
Yep.
limit. So FHA is already on board to have that part of the loan. So real quick, buyers, this is what I think is interesting, you guys. The buyers, the lawsuit is to protect the buyers, really.
Mhm.
I mean, they're worried about price fixing. It's good protect both, but it's primarily the buyers because they're concerned about directing the buyer to a property that they may or may not want or need to make sure that you get paid your commission, right? That's the gist of the lawsuit. So we're gonna settle this to protect buyers. And you know who the biggest loser in this whole thing is buyers. And the reason I say that
Mhm.
for what Joe said, you might, if you don't understand it and you're working with an agent that don't understand it, you might have to come out of pocket. One, and two, if you're concerned about that, you're not getting educated, you may choose not to buy at all. Like,
Mhm.
look, I can't afford this, so I'm not going to buy, or I'm going to go into an agreement without being repped at all, and then I'm
Mhm.
going to get potentially taken advantage of. So I think
Yeah.
that this opens up buyers to some big problems.
Yeah.
So it's very interesting to me that the group we're trying to protect is the biggest loser in the entire thing,
Which
and
is
that's just my
unfortunate.
humble opinion. So
That sometimes happens, right? It's like an unintended consequence of a lot of regulation that the group you're trying to help are the ones that get hurt.
yep, it's very sad. I understand it, and I feel like maybe doing something is probably appropriate, but I feel sad about how this all went down. This episode is brought to you by Pine Financial Group. Pine Financial is a private lender specializing in short-term rehab lending to real estate investors. Got a property that needs some love? We can help. We are able to offer funding solutions because we raise private money from individual investors. With more than 15 years of experience, Pine offers passive investors an alternative that provides stability, consistency, and security to your portfolio. If you like real estate but want to avoid the ups and downs and effort, a Pine mortgage fund could be a perfect fit for you. Accredited investors will experience an 8% preferred return and profit sharing. Diversify your portfolio out of Wall Street and into Main Street with a Pine Financial Group mortgage fund. Get more information at pinefinancialgroup.com. That's pinefinancialgroup.com. Joe, how does this affect you as a lender?
Really doesn't. You know, the big thing that we do is we're here to support our agent partners. We're here to support our buyers. And, you know, I tread really lightly on discussing somebody else's commission. You know, if buyers ask me, can I negotiate that in? Can I do this? I'm like, you know what? That's not a conversation that I should be having or making decisions on. You need to talk with your buyer's agent, and they're going to explain all those all those contracts and all those disclosures to you. And then, if you need help with the financing piece, that's my job. So I try to be really supportive to real estate agents because there are a lot of folks that are really nervous about it because it is an
Yeah,
industry shakeup. Like, let's be
yeah,
clear about that. It
yeah.
is going to change business practices. And my job is to be supportive and help in any way that I can and make sure that the buyer gets the best possible loan and the best possible service. And the seller's agent and the buyer's agent get the best possible communication and service from my team. So I'm going to remain focused on what we've always done.
Yeah, and I've heard, I don't know if you've heard this, that Fannie and Freddie sound like they're going to follow FHA's lead here.
Yeah,
And
it's already in the guidebook actually. So yeah, real estate commissions have never been marked as a seller concession, and they did make an announcement just reiterating that. It was added in like the early '70s,
oh
so
wow,
it's
okay,
been in there forever. And everybody was reaching out to Fannie, Freddie, and FHA looking for guidance. And everybody on this call maybe doesn't know, but I'm a huge nerd and I read all of those books every quarter when they come out. So I already knew it was there. But Fannie, Freddie, FHA, they're very good in their communication. And they said, hey, please refer to XYZ section of the handbooks. This is already in there. This is no change to the lending industry. So I
wow,
thought
I
that
didn't
was
know
really
that.
smart that they did that.
That's great.
Yeah.
And then so the holdout is VA, and VA strictly prohibits
Well,
a buyer paying their agent. So
interesting breaking news 2 days ago at the Mortgage Banker Association conference in New York. VA came out and said they are publishing a temporary circular, which is their updates to their handbook. And they are going to comment on this. And the implication was it is going to be acceptable on a temporary basis for buyers with VA loans to pay their real estate agent. And the reason it's a temporary basis is it takes a while for the VA to go through their process of getting approvals on changing their regulations. But the implication is by the middle of June, they're going to give temporary guidance that it is acceptable, and that will eventually turn into permanent guidance. So now, if you're watching this later and that has not happened, that was just the breaking news from VA that's what they're implying, and we are waiting for official confirmation on that. So it looks like it's going to be fine for the lending industry.
That's great. I was expecting that,
I was
but
too.
that I didn't hear that. So thank you.
Yeah, absolutely.
We're recording this on May 22nd for your listener. Okay. I want to do contact info for both of you, but Coop, any last words here?
Well, I just want to reiterate what we've been saying through a lot of this conversation, which is you got to surround yourself with the right team. You got to have the folks who understand all these moving parts. I mean, this stuff Joe was just rattling off, for Joe, this is just all day, every day. But if you were to have Joe in a room with 10 other mortgage lenders, it might be just Joe who understood all of that. It might be just Joe who recommends all these options of different ways to have your buyer's agent paid. And it crosses over not just from Joe in the mortgage industry, but into the real estate agents, working with the right ones who understand these things, who can advocate for you and to help you find the right home and make sure everybody gets paid and financed appropriately. So really it comes down to making sure you're working with the right team, as always.
Yeah, I completely agree.
Well said. Well said. So let's work with the right team. You guys are the right team. Joe,
Thanks,
how do we get a hold of you?
Yeah, you can find my website, www.loansbyjoemassey.com. You can call me, 303-809-7769. And of course, you can email me, jmassey@castlecookmortgage.com. As Justin said, I read this stuff, talk about it, enjoy it. I look at charts, graphs, and lending handbooks all day long, and always happy to have a conversation on any of these topics.
Yeah, we'll put all that contact info in the show notes. So, Coop, something we don't do very good on this podcast, and that's my fault since I'm the host, is tell people what we do. So, help us out.
Absolutely. So Pine Financial Group, we are hard money lenders. So short-term, high leverage loans for real estate investors. So we fund fix and flips. We fund rentals. If you're looking at the BRRRR strategy, we fund new construction projects. We fund commercial deals. What we like are the ugly properties, and we like for our clients to make them pretty again, right? Just like we were talking about, selling a good, clean, pretty property. That's what we want to help our clients be able to do. So what we want to do, we've got a couple different loans, but ultimately take the ugly ones and make them pretty. So we want to help you cover 100% of your purchase price. We want to help you borrow or get access to up to 100% of the rehab money. If the deal's strong enough, we'll even cover the closing costs for you. So hopefully, if it's a good enough deal, it'll be a no money down deal. And so like Joe was saying about having these conversations all day, every day, this is what I do all day, every day is run the numbers, talk about the math, analyze deals with my clients, get my clients pre-approved. Love talking about investing in real estate, fix and flips, sharing ugly horror stories of my rental properties and my fix and flips. But that's what we do at Pine Financial Group. We are hard money lenders and we love to lend investors money.
How do we get a hold of you?
So our website is pinefinancialgroup.com. My email address is justin@pinefinancialgroup.com. And my cell phone number is 303-916-5366.
If you're watching this on YouTube, do us a favor, hit like, hit subscribe, thumbs up, notification, all of that stuff. If you're listening to this on any of the other outlets, the podcast outlets, Spotify, Apple, any of those, please do us a favor. Leave us a 5-star review. You don't have any idea how much that helps us grow this podcast. It's huge. And then you could share it with a friend as well if you don't mind. We really do want to bring you fresh, amazing content like we did today. So with that, thank you, Joe. Thank you, Cooper. Really appreciate your almost an hour of time now. Gosh, that went fast. Really appreciate your time. The viewer, the listener, thank you so much for tuning in. And I hope you make this day a great one. Thanks, guys.
Thanks, guys.
Thanks, Kevin. See you, Joe.
Hey guys, I hope you enjoyed this episode as much as I did. If you did, please be sure to follow and leave us a review. Oh yeah, and tell a friend.